In 2024, for the first time since 2011, Tesla's annual sales failed to grow. For over a decade, Tesla was the gold standard of growth. It wasn't just a car company, it was a rocket ship. But in 2024, the engine stalled. For the first time since 2011, Tesla's annual sales failed to grow. They delivered about 1.79 million vehicles, falling just short of the 1.8 million they moved in 2023. At first, it looked like a glitch, a 1% dip. But by the end of 2025, the trend didn't just continue, it accelerated. Tesla entered a second consecutive year of declining sales. By the time the 2025 numbers were tallied, the company had delivered about 164 million vehicles. The slide was steep. In the fourth quarter of 2025 alone, sales dropped 15.6% compared to the previous year. To understand why the sales stopped growing, you have to look at the mechanism of the market. For years, Tesla relied on a specific set of drivers, early adoption, and government incentives. But in September, a critical pillar collapsed. The $7,500 tax credit for new electric vehicles ended. This created a strange artificial spike. Before the deadline, buyers rushed to snap up EVs to save money, driving record sales for Tesla and its rivals. But once that credit vanished, the market hit a wall. Sales dropped across the board, not just for Tesla but for Ford, Hyundai, and Kia too. Tesla tried to fight back with price cuts, rolling out cheaper versions of the Model 3 and Model Y. But it wasn't enough. In November, Tesla's sales hit their lowest level since 2022. While the US market cooled, Tesla's international fronts were crumbling. In China, the company faced a brutal war of attrition. Local rivals were offering high-tech models at rock-bottom prices, eroding Tesla's dominance. Then there was Europe. In a rare instance of political backlash affecting the bottom line, registrations plummeted after CEO Elon Musk endorsed the far-right AF party in Germany. In France, December registrations dropped 66% year-over-year. In Spain, they fell 44%. Analysts pointed deeper, structural problem, a stale product lineup. Aside from the Cybertruck in 2023, a divisive pickup that proved to be a sales disappointment, Tesla had no new vehicles. For years, Musk had teased a next-generation, affordable Tesla, rumored to cost around $25,000. It was supposed to be the second growth wave, but that wave never hit the shore. Despite public denials, reports emerged that the low-cost car project was dead. This left Tesla in a precarious position. The company was no longer the undisputed king. For the first time, a Chinese rival, BYD, surpassed Tesla in annual sales of battery electric vehicles. BYD's battery-powered sales rose nearly 28% in 2025, reaching 2.26 million units. Tesla, meanwhile, was sliding backward. The financial toll was severe. Tesla's profits slumped 46% year-over-year. The company was caught in a vice. Revenue was under pressure from a fragile global economy, while costs, including worker wages, were rising. Facing a collapse in its core business, Elon Musk decided to pivot. He announced that Tesla was transitioning from a car company to what he calls a physical AI company. This wasn't just a change in branding, it was a total reallocation of the factory floor. Tesla made the shocking decision to discontinue production of its higher-end Model S and Model X. These cars were the foundation of the brand. The Model S was the world's first mass-produced, highway-capable EV and the first vehicle built at the Fremont factory. But they were now symbolic, not profitable. Tesla is turning that production space over to something entirely different. The Optimus humanoid robot. Musk is betting the company's survival on robotics and autonomous ride-hailing. The centerpiece of this gamble is the Cybercab. Unlike any Tesla before it, the Cybercab has no steering wheel and no pedals. It is designed for a future where, in Musk's words, less than 5% of miles driven are done by humans. Tesla launched a nascent Robotaxi service in Austin in June, and mass production of the Cybercab is slated for April. Musk has already claimed he took a ride in Austin without a safety driver, though as of early 2026, those vehicles were still only available to the public with monitors present. This pivot comes with a staggering price tag. Musk warned Wall Street that Tesla would spend $20 billion in the coming year, more than double the capital expenditures of 2025. It is a high-stakes trade. Tesla is abandoning the traditional automotive growth model, the one that failed them in 2024 and 2025, and betting everything on a future of autonomous AI. The company that taught the world how to buy electric cars is now trying to figure out if it can survive without selling them.